as we continue this discussion, Al, about these multiple directional investment strategies, they are available in all assets. You talked a little about earlier stocks and options, but I want to get into more of those leveraged assets, those assets that the smart money is using to create income. We have a lot of listeners that probably want to understand, how do they do that? What are some of those techniques that they use? But more importantly, what are those assets that give the best opportunity? Now, I mentioned in the intro here, that's futures and Forex, right? Explain how those really work, what those are, so our listeners can understand that there might be opportunities in assets other than the stock market, but to do that with leverage and potentially any time of day.
One of the reasons that there's such a difference between the returns that the smart money out there get and the public, the retail traders get, is because the smart money knows how to use these leveraged assets. And one of the problems, it's kind of an advantage and a disadvantage, but it creates a problem. And that advantage is that these markets are available to everyone, which is an advantage if you know what you're doing, but a huge disadvantage if you don't. So again, it gets back to or down to proper education. The institutions are smart money are using these leveraged assets because they know how to use them, and they use them because they know there are significant benefits in using them. If you're looking for something other than just putting together a long-term retirement portfolio, if you're looking for something that can maybe help you out now with some extra needs, or something that can provide a little bit of extra money to put into those wealth accounts, well, then you need something that trades on a short-term basis. And Josh mentioned two of them, the futures and Forex. The futures market is probably the shortest time frame trading vehicle. Oftentimes people are in and out of a futures contract in a day or so. Even that, by the way, even though you are short-term trading futures, they are treated as a 60-40 tax split, which means 60% is treated as long-term capital gains, 40% short-term, even though all of the trades are short-term. So you get a great tax advantage there. With futures, you're trading a bunch of things, including the major stock markets, but also commodities. Your favorite, of course, which
we always
is
got to talk about lean hogs.
We do.
Can't forget that.
People would be disappointed if we didn't mention lean hogs. All of the grains, oil, gold, silver, currencies, interest rates,
oil,
a number of things that allow you to have a very well diversified portfolio. Futures trade short term, as I mentioned. Also, they trade almost 24 hours a day, which gives you a lot of versatility as to when you do it. You don't have to be available just during the 6.5 hours that the stock market's open.
What do you mean by short term? Because I want to make sure that doesn't sound like it's just day trading.
No, and by the way, the proper education source for you should really provide a spectrum of trading style and asset class education. At the Online Trading Academy, there are styles that we teach that are short term. It could be for people that are looking at doing this maybe daily or weekly, swing trading, which is a little bit longer term, and then position trading or long-term investing. So all of those strategies or those time frame trades and investing styles are taught, along with investing theory for stocks, for exchange-traded funds, for options, futures, and Forex. Futures and Forex have great leverage, and that is the primary reason the institutions use them. So every dollar that is in an account can control maybe anywhere from 10 to 100 times that amount in an investment. That allows small positions or small amounts of money to be utilized with a position that is a much larger multiple of that account. It allows more people to participate in a variety of things. And it allows people, maybe even in retirement, that want to maybe protect the majority of their retirement money. That's where the leveraged assets can come in and be utilized in retirement accounts.
You're right. I mean, the whole strategy is to be more capital efficient. So when Al's talking about small amounts of money, that's a general term. anybody can take that and run with it however they want. But it's utilizing whatever capital that you have and utilizing it efficiently by using that leverage. Futures is an example of that. And if you want to learn more about futures, learn more about, I guess, being properly diversified, you can use those to be diversified, because Al speaks every week. I mean, corn has no correlation with the S&P 500.
Correct.
Right. So it's just being more diversified, whether you're in your income accounts or retirement accounts.